No, I was gonna say, you know when you like have to tell a joke on demand, like what's your like go-to joke?
Mate, I'm terrible at that. I'm blanking, mate. What's yours?
I don't know. It's always why are pirates
Why?
because they are.
It's dreadful. I think I'm almost better off not having one.
No one ever laughs.
Alrighty,
Oh,
should we
boy.
rip into it? Travis Ricciardo. We've got an exciting episode in store today, mate. Some big companies reporting, some interesting companies capital raising, and a prelude to one of the most exciting companies on the ASX, none other than MinRes. And you're looking very smart for the occasion, mate.
Yeah,
Got all dressed up.
Mate, this is a shirt I bought when we were in Cape Town because I didn't have nice enough shirts to wear. But
I thought I recognised that one.
yeah, exactly, mate.
Subsequently got worn 3 or 4 days in a row.
How does it feel to be back in the hot seat, mate?
Mate, it feels pretty good. It was rather seamless today when you jump onto a couple good stories, and we've got a few good ones, I think. I was pretty excited getting into the weeds on Adriatic. We've sort of followed it in and out for a couple years now. Lots going on there, and we've kind of keenly been following the evolution of the company from a, construction story, development story into...
No. It was construction into fully funded developer, fully funded developer, fully funded developer, fully funded producer, fully funded producer.
The subtitle, ramp up, ramp up, ramp up.
Yeah. Oh,
And-
gosh. Anyway, they're raising money again today.
They are, which we'll cover in good detail. BHP as well, a few interesting things. Slash the interim divvy to the lowest level since the real depths of the commodity cycle.
Yep.
Which, there's a number of reasons why that's kind of happening, which we'll talk about. And
I'm keen to revisit their acquisition of Minerals and probably give them a fail for now. On that
yeah,
one.
I think that's worthy, and we'll unpack that one. Why don't we start there? Because they're the big fella, the big Australian. A lot of eyes, all the generalists look at them for kind of bellwether of how the resource sector is doing, mainly iron ore, increasingly copper, a good chunk of their earnings coming from copper. No surprises, they've spent a massive amount on acquisitions, and what doesn't get quite the same attention is the amount of capex that they've spent on all of those projects as well.
Totally, mate. There's always a bit to chew through with BHP's results, so the only way you can really do it justice is just to focus on a very small slither of that company, and I'm choosing the part of the company that's a bit close to home, within the big Australian, not the West Australian iron ore business, but instead the South Australian copper business, because I actually think it'll be an important part of Mike Henry's legacy. And the revelation recently, is that his successor is going to be determined in the near future as well. So, in the tail end of Mike's kind of reign, I just wanted to revisit the $10 billion acquisition of Minerals, because that was just a tad over 2 years ago that kind of all happened. And to kick things off, I want to bring up this chart. This was a chart on slide 20 of their earnings deck released today, where they
talk through it for the people on the podcast. What are we kind of seeing?
They're basically kind of articulating where the growth in copper tons or copper production from the South Australian copper business is going to come. Particularly over the next 5 years, and then beyond that into the mid 2030s. They're sort of saying that the copper production can go from 300,000 tons per annum all the way up to potentially 700,000 tons per annum, with stepping it up along the way. And
Got to have a growth story.
It's kind of interesting though. You look at the title of the chart as well. Copper SA Growth Pathway, capturing US 1.5 billion in potential synergies. So the narrative's already there. They're trying to kind of substantiate the acquisition of Minerals by talking about synergies within the title there. But if you just look at the chart, they've laid out the volume growth, and you'll notice the heavy lifting to be done by Olympic Dam and eventually Oak Dam on the in the mid 2030s there. What you'll notice is that it's not really Carrapateena that's moving the dial, or Prom Hill, especially Prom Hill. It's all pretty marginal growth to come from the Minerals mines there. And here's another chart which I pulled up from the half year results. This is one of the usual charts you'll see in BHP's results when they report it. I love the chart. It's return on capital employed by asset, and of course always West Australian iron ore business leads the way, because any marginal expansion you can do there delivers just a phenomenal IRR as a result of the fact that it's such a high margin business. So it's always such a dominant part of this chart. But follow this chart all the way down the tail end, and what you'll notice is that the return on capital employed at the South Australian copper business is lower than they even get for their BMA business. And you'll remember they refuse to invest anymore in the Queensland coal business. Well, it's like a hardline stance they've got thanks to the royalty regime now. But kind of just
interesting, yeah. And they do really love this chart. I mean, it shows you so much about their business. It shows you how awesome a cash generator that iron ore business is. Just you get the sense from there where it sits on the cost curve, and you sort of invert that, and you get some big sort of thoughts on copper South Australia.
Keep in mind on the x-axis there is the cumulative capital employed. So the amount of capital employed at the South Australian copper business, it's like I'm eyeballing it here, but it's kind of comparable to the iron ore business. But the return on that capital is so de minimis in comparison. It kind of looks like on the numbers here, it's like a 2 to 3% return on capital employed for the South Australian copper business in the reporting period here. So, and if I kind of dial it back to Prom Hill again, there was this disclosure within BHP's reporting today where they basically revealed that the capital budget for the expansion, there's a Prominent Hill operation expansion that's been kind of underway for a period now. The capex for that has now blown out to US $912 million. Now this project or expansion project is basically the sinking of the Wira shaft at the mine. This was approved by Oz Minerals back in 2021. At the time it was approved, it was supposed to be Aussie $600 million kind of capital project. If you convert what BHP has revealed today into Aussie dollars, it's equivalent to 1.4 billion Aussie, or 2.4 times the original estimate when Oz Minerals approved it. And on top of that, it was meant to be completed by 2024 when Oz Minerals approved the spend. Now in this detail today, we see that it's not going to be completed until the second half of FY27. And
shouldn't be a surprise.
It shouldn't be, especially if you read the director special, because I think we published last year, Word on the Decline, it was around September, that there was 130 meters worth of frozen material in the glory hole of the shaft being sunk there. Of course, that's relates to the Wira shaft, which is the key part of this PHOX project that has been underway. And this project, the whole point of it is you'll have this hoisting shaft, which would then enable the mine to be able to reach tons of the mineral resource which were otherwise uneconomical to truck.
It really kind of points to the style of mining that they're doing there being a bit outside the skill set. Very different to building a train line and a port and just running a logistics business super, super effectively, to their credit, in WA. This is a completely different challenge and requires a very different technical team.
I just get this sense that every time one of the big miners embarks on sinking a shaft, they just fuck it up.
It's tough. I mean, we saw the article the other day about Rio and the delays at OT and everything that kind of happened. That the article was about, from Kerry at the Fin, about non-disclosure.
Yeah.
And the consequence was costs blowout, time delays, and these things are super technically difficult, and there's barely a handful of operators in the world that actually do them.
Yeah. I mean, BHP had huge issues with Jansen as they were going deep, and of course Anglo with Woodsmith, and this is a different scale entirely. But there's a pretty big implication for the South Australian copper business when you encounter not just the cost blowout side of things, but it's the implication of that time extension from 2024 all the way out to 2027, likely to get pushed further. But yeah, we talked about this in Director Special. To bring it back to the M&A kind of deal that was done by BHP in late 2022, they paid $10 billion, 10 billion Australian dollars for Oz Minerals. Now when they did this, the independent expert agreed with the price tag, and they broke down the value of each kind of part of the portfolio for us. So you can basically infer effectively what BHP paid for each of the assets within Oz Minerals' portfolio at the time. Prom Hill was 2.5 billion, Carrapateena 5 billion, West Musgrave about 2 billion. I'm rounding there, but you get the picture. With West Musgrave, after BHP acquired Oz Minerals, they probably spent close to another $1 billion on the project before, halting things entirely there. And then you got to basically put a zero on that now.
Sounds super brutal.
Yeah.
Nickel price doing no favors, and
Yep.
yeah, it's in hindsight a horrible allocation of capital.
Prom Hill, we've got in Aussie dollar terms, $1 billion kind of capital blowout already, and God knows what the impact is on the schedule delay implications. Carrapateena, it's the only thing doing all right in the portfolio of what they kind of picked up, notwithstanding the block cave is already way behind schedule though. So look, I think there's just a big question mark here on whether the South Australian copper portfolio is really BHP appropriate or not. You can see by the return on capital employed in this earnings release and historic ones when they would categorize it as an Olympic Dam only, that it historically isn't a BHP type asset. It just hasn't yielded the returns on capital that you would expect of a BHP type asset. Of course, BHP are super bullish on copper, and if copper price goes up, all of a sudden your return on capital looks marvelous. But to date, it just hasn't. So I think, does the deal stack up for BHP yet buying Oz? I think no. I think those potential $1.5 billion in synergies don't offset the 4 billion Aussie of write downs that I've just talked about in between Oz Minerals and the blowout at Prom Hill since buying Oz Minerals, and when Mike Henry's kind of term comes to an end, I think there's even a chance that these assets could make their way out of the portfolio again.
New CEO comes in,
yeah,
cleans the board. Yeah,
it wouldn't happen straight away, and there's probably like a low chance on it happening given the DNA of a copper heavier BHP. But yeah, can a BHP which has so much fat to that business, can it actually generate the returns required to get good margin out of these assets, or is it sort of better suited in a right sized lean operator that can do it?
It's looking pretty tough at the moment. We'll see. The big swing factor, like you said, is the copper price. We'll see how that sort of performs. That may change the perception that people kind of have. But as it stands, this is the big deal that Mike Henry did, and it's not looking too great. I'm sure he'll be, all too aware of that at the moment, and he'll be working hard to look at other deals, look at other propositions. Obviously, the Anglo deal, had that gone through, would have completely changed his legacy. Everyone would have sort of put Oz to the side and thought about however that deal might have gone down had it gone through. Needless to say, it didn't go through, so here we are.
Yeah, and look, there was a lot of there was a whole separate slide in the deck today, which basically showed the capital intensity of inorganic opportunities versus organic growth opportunities that they have within their Chilean copper business. And what the point of the slide was that they've got a lot more accretive ways to add tons via their organic growth within Chile. Now it didn't show that same chart for their South Australian copper business. So I just
use the Prezzo to highlight the positive.
I think it's been disappointing so far for the South Australian copper business.
I think you're right, mate. All right, what do we got next up?
Well, what I always find interesting is we've just come back from Africa. Notably went to the Indaba conference, and when we travel to corners of the planet, one thing that I've picked up on a couple of times, I'm always amazed at just the brand recognition you can sometimes get across the globe for a little Perth kind of company. And I'm not talking about money of mine, mate. I'm talking about K-Drill.
K-Drill.
We were talking about, I can't remember who the conversation was with, but I definitely distinctly remember it. Maybe you remember. But we were talking about the wicked partners that help us keep the podcast free for everyone in a conversation with someone at one of the functions we were at Indaba. I think they were South African, and they said, mate, I bet those ads work. If I needed drilling, I'd Google K-Drill unprompted. It was amazing. But see, mate, K-Drill's home ground is WA. All these spots on this map, that is where their rigs have been lately. RC Diamond, Auger, and Aircore rigs. They traverse the West Australian outback to get the core needed for exploration drilling, mate. And you know who gets the most meters per shift? The drilling partner that says, we can do it. with a K, spelled with a K.
We can. Tell me.
Whatever
Tell
your
me.
drilling needs, mate. K-Drill can.
K-Drill.
Call Druba or Rhino today. Call with a K.
Go K-Drill. For all your RC, diamond, any drilling needs you've got, give the big fellas a call.
You remember that chat? Who was
I
it?
do. Was it Mike Henry?
Oh gosh.
Alrighty. Let's have a quick chinwag about M&A.
This was just a
Big end of town M&A.
a bit of a brain fart I had just thinking the other day. The US dollar, US Aussie dollar, I think it's back to 64 cents, but it went like as low as 60 cents there. It's still, the US dollar is still like really strong on a relative basis. And when you've got that dynamic, I think it makes that cross-border M&A a lot more interesting here for any New York listed miners to potentially buy Australian assets. In the gold space, there's a handful of New York listed companies. The inverse also applies. It's not at all compelling for ASX listed miners to go to the US. But I just think watch this space to see if there's any opportunism on this front. It's a kind of perfect set of macro scenarios that can motivate that kind of M&A activity. When you have record gold price, animal spirits kick in, and then you've got the US AUD kind of in your favour to embark on these sorts of ambitions.
I'm on watch out for those animal spirits that you speak of, mate. That is what the gold industry has been whipped for the last decade. And, you listen to the likes of Jake Klein, he comes to mind. Very, very cognizant of these animal spirits returning, very fixated on shareholder returns at the end of the day. And Agnico is another company I'm sure comes to your mind. You listen to their call, very fixated on what are shareholders getting for this gold price? Is it flowing through to the bottom line? Or are we just seeing cost inflation? It's managing those costs super, super tight and not going and blowing it all if you do make it on a bad deal at the top of the cycle. So very, very keen to see how it plays out.
I don't think you'll hear the word on a per share basis mentioned more than during an Agnico call. Everything's per share.
No qualms with that on my end, mate.
Yeah. So something that there might be qualms on your end is Adriatic is raising today Australian 80 million or US $50 million. It's not the first time we've woken up to a surprise Adriatic raise. Is it different this time, mate?
I won't answer that. I'll let the company answer that. Let's play a snippet from about 2 weeks ago from the quarterly call.
Finally, on liquidity, do you believe that you'll have enough cash to get through 2025, or will you need to look at other options in terms of capital raises?
Yeah, so actually feel pretty decent, and to circle back to some of the slides, 46 million of cash today, now that we've closed the Trafigura prepayment, and we have been basically cash flow neutral for 4 months now. So I think that's kind of a good, sort of track record, even though the plant has only been, again, running at kind of like 25% capacity. And we had our sort of challenges in October and December, due to weather, which obviously, came in with a bit of a lighter quarter. So if you think about that and you say, okay, but now we're doing 75 to 80% capacity in the plant, the crusher's back up to running 1,500, plus ton per day. That's about a 40,000 ton a month sort of run rate. So kind of 2/3 to 70% of production. On that basis, we should be well ahead of just cash flow neutral or break even. We should be, positive free cash flow. So you think 46 today, we've got to pay back about 18 to 20 million a quarter for the next 4 quarters. But really we'll be cash flow positive. So from here, everything we're paying for should be out of cash flow, and we don't see the need for additional liquidity.
No chance of a raise just 2 brief weeks ago.
That was the ideal thing to say if you want to raise money in 2 weeks' time at a pretty, they're pretty close to all-time high share price and a tight discount. It's honestly, impressive to get a raise like this away under those circumstances when there was probably a relatively, clear line of sight to a funding gap here too.
Yeah, seriously impressive. And I think that's why it's worth giving a quick mention of the backers that they've got. I think a lot of people will know this, but to your point, about a 7% discount, which is, relatively tight. And you've got L1 on the register owning a big chunk around that 15% sort of range. The same can be said for Helicon, fund out of London. And then Orion, who are tied in with the debt, they're on the equity too.
Have they tipped in more, Orion, in this raise?
They got named, yeah.
Really? Because they were trimming in the last placement they did. Wow.
Interesting to see that, right?
Yeah.
And then former potty guests in Old West and QRC are also on the register, nowhere near as substantial as the previously mentioned ones. And of course, you've got the board and significantly Paul Cronin, who was also named to be tipping into this raise. So US 50 million, like you said, ostensibly being raised to fast-track Vodash expansion and enhance balance sheet flexibility. Now, this sounds, as you were alluding to, awfully similar to the raise that they did during construction, which was, in quotation marks, for exploration, or the raise they did last year to go owner-operator. And I don't want to take away from the difficulty of ramping up a project. You know, we've never done it before. I'm pretty aware of that, and it's hard work. You're always going to face challenges that you had no idea would be whacking you in the face before you start. So it is seriously hard, and I don't want to make light of that. But I think the amount of raises they've had to do just really speaks to the challenges in getting this particular operation up and running. There's been all sorts of problems. And with that in mind, I can't take the narrative sort of spin on the raise too seriously. Just a couple of weeks ago, when we played that highlight and the quarterly came out, we'll put up now, you can sort of see a snippet from Laura Tyler, the MD, talking about a delay to the start of commercial production, which has been pushed numerous times now, this time into Q1 of this calendar year because of weather and other related, which were only the most recent of the challenges that they'd kind of faced. So it's kind of hard to marry up going for an expansion when you're running the mill at 25% of capacity and you haven't really run it at any more than that. Like, yeah, there were days where they were running it at sort of 60 or 70% the mill capacity of, nameplate, which is 800,000 tons per annum. But it's hard to, match those two up in my mind.
We see expansion raises all the time, but the use of funds this time, it was actually kind of 50-50 between balance sheet and expansion. And
yeah, you have to do that from a legal perspective. I'm sure General Counsel would be saying, at least for their own incentive, their own job, that they'd want that jotted down under use of funds. Like you said, divvied up half and half towards this expansion capital, which, that's only going to hit nameplate supposedly in 2027. So that's quite a ways down the track. And the study showed that was relatively cheap, US 25 million, to take it from the 800,000 to the 1.3 million tonne per annum operation. But this is shoring up the balance sheet. Debt repayments start on the 31st of March. That had been pushed back 3 months, which had been pushed 6 months. So this was meant to start 3/4 of a year ago already. They've had pretty friendly relationship from the debtors, I'd kind of say.
Is Orion on the... Okay, yeah. And they got a prepay with Traffy late last year as well, right?
They did. So they announced that at the beginning of December, and they locked that prepayment up, I think, on the 17th of January from memory. So if you might remember, I think in about April of last year, they got an additional facility with Orion, but this swapped out for the Traffy prepayment. The Traffy prepayment was US $25 million, which these guys say is on much friendlier terms than that previously short-term Orion.
Which it very well may have been, but I always, because they'd done a raise before where they basically articulated that the raise funds could be utilised instead of having to tip into that secondary Orion facility, and then they got the Traffy prepay so that they didn't have to draw down the Orion facility. In the back of my head, I always wondered, like, what are the drawdown conditions? What are the CPs to actually draw down there? And are there any that they can't actually meet? And that might be driving some of the funding arrangements as well. And I never quite got to the bottom of that line of questioning, but yeah, a raise today and the prepay's already drawn. At least it puts to bed some of the balance sheet fears in the short term.
Yeah, I think through 2025 they're fine. So like I said, repayment starting, that's sort of circa US $20 million every quarter from March 31st. So that'll add up pretty quickly for, as you heard in the snippet that I played before, for an operation that was, break even at best. And there are investments they need to make still, talking about things like paste and other parts of the plant. They've had to fix up the crusher. There'll be other challenges they'll face, but there's investments that need to go into the mill. We know that operations are much more expensive than what they were. You can sort of glean that from all-in sustaining costs when they do talk about it. They're up, touching on 50% from the DFS a number of years ago because of challenges like we spoke about, with additional ground support needed.
Yeah,
sorts of
and
things.
the development meters are like half of what the. Is that right?
Yeah, exactly. And that's just a couple of the issues that a whole other with consumables, snow hindering access, and all that.
Yeah.
Just to round out on the financing side of things as well, they've got that debt, and whilst you won't see it in the quarterly report, there's a good chunk of capitalised interest there as well. It's kind of hard to glean. There's different reporting standards because they prioritise that London part of their listing for the financial reporting, as I sort of understand it. But I'd be guessing in excess of US $30 million is capitalised in interest there as well. So on the positive side of financing, they are doing this raise at a at a pretty decent price. Like, this isn't a very dilutive raise for the challenges that they've faced. I feel like we've spoken about companies in a not too dissimilar position, and they've had to do a way bigger discount whilst they're trading at a much lower, PNAV or whichever kind of multiple you use. So 80 million Aussie roughly when you're a billion odd dollar company isn't the worst thing in the world from the company's perspective.
You normally see a company priced to raise. They'll become raised. The market can figure it out. They'll sell off in the lead up, and then the ultimate ramp up raise is a lot more dilutive.
Really speaks to some supportive shareholders, I think.
Yeah, supportive shareholders. Yeah. They're having some wins on the recovery, everything like that. But I think it's still kind of hard to figure out how ramp up is really going to unfold and execute, because you take some small wins, but then there's context to the wins that they've had as well. Like what they're mining right now is a lot higher grade than the reserve grade is. How long can that last? What does that do to the recoveries, etc., like that, right?
Yeah, we know the positive flow through from a higher head grade, feed grade that's going through currently, looking a lot more positive versus what the study was. How long can that last is a question, but right now that should be flowing on quite positively to recoveries. That goes sort of both ways. So there's a sort of question on that front. Also, the challenges with the mill, they've been at the front. The challenge was that they articulated in the call was regarding the crusher. And like I said, they're doing about a quarter of the nameplate capacity. As they sort of work through and really scale things up, maybe the bottleneck shifts, and maybe they have other challenges in other plants, other parts of the plant. So we'll kind of see. Like, these guys have their back against the wall, and to their credit, I'm sure they've been working super hard. Like, I can rattle off some of the challenges from the weather they faced, snow that sort of had its flow and impacts on power to the mine, the rock competency challenges, which we started speaking about a couple of years ago now, the shortage in consumables, legal challenges regarding the tailings, the crusher, like I just mentioned, contract issues, water challenges, and the railway. About everything under the sun that could have hit these guys kind of has, and they haven't fallen apart. Things are still moving forward, so hopefully they can address them, and I'm sure that the internal learnings are just stacking up and up and up, and hopefully they can straighten out the ship. But yeah, I think things are looking quite different from what the DFS outlined 4 odd years ago and to what we were thinking a couple years ago.
It's a hard one to. I've always found Adriatic really hard to pick. If it's if I'm optimistic or pessimistic on the outlook, and I look forward to the ramp up kind of being over and commercial production being executed. It's just like what your funding dynamics look like in the interim that matter a lot, especially when there's debt in the cap structure. What do you think matters to the stock from here, mate?
I think you hit the nail on the head. Debt has just amplified everything, like it always does. But you've just getting the mining side humming, and then getting the plant humming. They're the biggest things, and then you can potentially see some sort of tailwinds if silver moves in their favour, if zinc moves in their favour. Obviously, they're polymetallic, so those are the kind of big ones. That's just what you kind of got to got to look out for. And hopefully, I think there's a lot that we don't actually know. I think there's a lot of challenges that is very hard for a public equities investor to get good insight on at the moment. Lots has changed from the DFS, like we kind of touched on there. So if you're an investor, you kind of just got to cross your fingers a bit and hope the team that can work it out. And yeah, if you're the company, just keep on pressing away.
What do you make of L1 Capital? They've been pretty big here. I think are they the biggest shareholder now? I think, but their commitment came about a year ago and has ramped up, and they've been
yeah. So they're about neck and neck with Helicon, in and around 15% when I last looked. Shareholders in this one. I mean, we've obviously spoken a bunch about this off the record. The track record in the main fund is super impressive. These guys have smart, and anecdotally, the amount of smart people we've spoken to that rate their team very highly, I think, that reflects very well on them. Then you dive into the returns, and again, like we've spoken about, a lot of them come from mining, which is interesting because these guys are generalist investors. So it's intriguing to see that the sector in which the highest amount of their returns has been driven over a decade plus is the materials space. So
the one equity that they've obviously been pretty public on lately is MinRes, and I think their average price in mittens is like $53. It's now 30, and earnings coming after market today.
Yeah,
and they keep kind of doubling down a bit.
Yeah, you're absolutely right. They play in a lot of the sort of bigger names. Like I think you can't make a judgment on them as investors on one kind of company. You don't always get them right, and we'll see how that one plays out. That's a longer term bet. They're not like the quote unquote fast money that we've spoken about in the past. They're not a pod shopper. They take a longer position. But other names we've seen them being busy in lately, Westgold comes to mind.
NextGen, biggest shareholder.
NextGen,
yeah.
NextGen did quite well for a while. It sort of backtracked a bit. I don't know the latest on their position in that one.
I think their net debt. Well, could be wrong. Yeah,
it's interesting.
Yeah,
never spoken with them, so can't speak to that side of it.
Get in touch, show one. We've tried to reach out to you a few times.
We would love to. We would love to have them on the show and hear about their views.
Rafi, get in touch. Mark.
All right. There's another company I want to talk about, mate.
Tell me, mate.
This is a company that can make a heap of challenges just disappear for a mining company. I've got to talk about Saltbush Contracting. These guys are the champions of bulk haulage. First and foremost, get it in your minds. These guys are the mine to mill specialists. And it's not just bulk haulage. They also do earth moving, crushing and screening, a heap more. If you want to hit your ton targets, when the ore comes out of the ground, comes out of the pit, wherever it is, just call Saltbush, they'll move it.
I don't want to hit my ton targets, mate. I want to beat them.
You want to exceed them.
I want to exceed
Saltbush.
200%.
As their website says, mate, win, win, win. Not my words, their words.
So I win, you win, and everyone wins.
Community wins, the customer wins, the client wins, your employees win, everyone wins, mate. These guys have got hubs in Kalgoorlie, Meekatharra, Perth, and none other than Perenjori.
Perenjori.
I had to look up.
That's a farming town, mate.
Yeah. I was intrigued. But lo and behold, if you're around there, if you're in the area, get in touch with Saltbush. And I don't think this has been stressed enough. Obviously, everyone knows that they do bulk haulage. That's your bread and butter. But they're also in equipment hire, road maintenance, ROM handling and management, mine site construction, setup. You want to get a box cut excavated, site rehab, tailings construction. As Matty said, you want anything done on a mine site, just give Saltbush Contracting a call and they will happily look after you.
Saltbush.
Go Saltbush.
Good on them, mate. What GCs they are.
They should call a family business, mate.
Absolute legends.
Alrighty.
One last thing to touch on, mate, because by the time this episode goes up, Mins have probably already reported, and I'm sure we'll have a bit to troll through tomorrow when their call will be as well, and I'm sure we'll talk about it a bit more too. But I kind of just wanted to give a brief prelude to MinRes's results, which will probably be out by now. I don't think they'll be very good, is my gut feel, but they could already be priced in, to be honest. Ding, ding, ding for LGC, who still holds Min, by the way. The thing I wanted to mention before the results actually come out, though, is a certain report that was released over the weekend. In the 2 trading days since that report was released, Min's share price has fallen 5%. It's flirting already with that $30 mark, which has been its floor for the last 6 months amid all of the turmoil that's come the way of the company. And the report that was released, it actually came out of Albemarle's litany of reporting documents for their full year FY 2024 calendar year 24 is their reporting period. And it was a technical report in amongst all the docs, which was produced by RPM Global, specifically on Wodgina, because it was a whole technical report on Wodgina with a bunch of comprehensive detail that hasn't kind of been publicly released before, both about the resource, the performance of the asset to date, and forecast performance based on the life of mine plan that exists within the JV. And without going into like the full detail of everything in this report, I think it's fair to say there'd be a few discrepancies between how the market has been valuing Wodgina versus what this report suggests the value of Wodgina is. Headline takeaway is that based on the life of mine plan detailed within this report, 50% of Wodgina has an NPV of Aussie $1.3 billion at a US $1,300 per tonne spot price.
Bit below broker consensus, wasn't it?
It's a fair bit below broker consensus for Min's 50% share of Wodgina is, slightly north of $3 billion, which is nearly a difference of $10 per share when you think of it in Min share price. What's more is the life of mine plan that's in this, which creates the base case in this report. It assumes recoveries at Wodgina actually, increase like 8-ish% over the next couple of years, and it also assumes grade increases a fair bit from where it is now as well.
2025 was looking like a tough year in that report.
Max strip ratio 2025, yeah.
Capital investment was elevated. It was coming at the wrong time, to say the least, for Mins.
Yeah. So I just think there's some big clouds hanging over the asset, and this is the best of the bunch in their lithium portfolio. And Mins, of course, they have a favourable mining services contract at the project, which helps them kind of offset some of the negative cash flows of being a 50% equity holder of the project. But with the detail in this report, I don't believe that's offsetting the cash outflow that you're seeing at current lithium prices. I'd still be a believer that this asset is cash negative for Mins at the moment.
Yeah, it's such a funny one that
yeah.
When you're the half owner of the business,
yeah.
If it's benefiting one side, it's taking at least half from the other.
Yes, yeah.
So
yeah, I think their contracts have these like various escalation terms, etc. Depending on certain. But I still can't believe a narrative that this asset would be cash positive for Mins. That's my view based on everything that I've read in this report. Anyway, I'll have more to say about the whole business after their results, I'm sure, and I look forward to reading them tonight.
Yeah, lots of fascinating implications on what a potential sale of Wodgina could look like, and that contract would be a huge impediment to anyone wanting to.
I totally agree. I mean, they often talk about how if they they've got a life of mining services contract over all of their assets, so if they ever sold them, they'd say them. But I just don't see. I struggle to see someone who would buy it and want to keep that contract in place. You'd want to retweak it or remove it entirely. Like, would Pilbara Minerals buy Wodgina? Well, don't know, but I doubt they'd buy it if it came with MinRes' contractor.
I could say that with a bit of confidence.
Yeah.
I think you'd want to have a bit more control in your own destiny if you're going to buy the asset, and maybe they'll get an opportunity in the coming sort of period. We'll sort of see.
Yeah,
it's an interesting one. Very excited to see how that earnings release goes and the call goes down. I'm sure it'll be fireworks as usual with it.
Let's see if they hold $30, mate.
Let's see.
All right.
Alrighty, we've got a couple awesome partners to thank as we wrap up, mate. Big thank you to Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, the mighty Saltbush Contracting, Swick, Quattro Project Engineering, and Cross Boundary Energy. And last but not least, if you want to go to the Oz IMM Underground Operators Conference, get in touch, go on the show notes. There's a discount of $100 waiting for you. Go Australia.
Go Australia. Bit of a-
situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.